Gonna just wait a little bit.
No, it's coming. It's coming.
Okay. It's live. It says live. Are we live?
It takes about 20 seconds.
Oh, I see it.
So if
there we are.
So when you see it, you can start sharing it.
Yeah.
I'm sharing it right now.
It's up?
Yes, it's up.
I don't see it yet. Okay.
It is.
All right.
Okay.
We are here. We are live. Hello, everyone. Good evening.
Hello, everyone.
Make sure you mute your.
You gotta mute your phone. Whatever you have it running on, mute it.
Yeah.
Yeah.
Yep. All right, we're getting ready to get started.
All right.
All right. Tell me when, Angela.
Did everybody finish? Then you can start. Go ahead, my love.
Okay. Welcome, everyone. You know that this is a part of a series that we are doing, Assemblywoman Angela McKnight and Assemblywoman Shanique Speight and myself, along with a host of people who have been participating and calling in to give the community information. The first thing I want to do before saying anything else is a moment of silence for all of those who have lost their lives due to COVID and remembering their family and friends in our hearts and prayers. Thank you. So we have our topic of conversation today is actually about finances and planning. And we have a really exciting panel here for you today. We have Althea Ford, who is the Director of Government Relations for the New Jersey State Funeral Directors Association. We know that there are so many different questions and the funeral homes are actually quite overwhelmed. And many of you unfortunately know that through personal experiences having to call for a loved one. Actually, this week alone, we had to deal with a funeral home who was just exceptional to come and pick up someone who had passed in the home due to COVID. And so shout out to the funeral workers who were there. We see you and we thank you. And we're actually going to be hearing about some of the process that's going on, which is extremely different than the times where we're not dealing with a pandemic. We are actually learning to mourn differently, and our funeral homes are there at the helm helping us to do that. There's virtual viewings and just, it's very different. So we're gonna learn from the funeral directors and just get all of the information that we can glean from that about this very different process. Then there is someone who is very dear to me, and that is Edward Giblin. He is a certified financial planner, and I call him Teddy affectionately. Everyone calls him Teddy.
You can call me that.
Yeah, thank you, Teddy. And he is very dear to me because he is a wealth of knowledge. And if there's something that I'm able to learn, sharing it with you all, I believe is also part of my duty. And Teddy has taught me about money and about planning for finances, life insurance, retirement, all of these various different things. So, you know, we're just really excited to have everyone on. And also Tiffany, I know, is the Budgetnista, who does amazing. And she's gonna be talking to you as well. So that's what we're here to do. We're here to talk about all of these things and put it all together. And I'm gonna turn it on over to Assemblywoman Speight.
Hello, everyone. Moving forward, we're gonna have our lovely, my Assemblywoman, my colleague, Assemblywoman Linda Carter. You can go ahead and start this discussion, and we thank all of our panelists for being here. So thank you so much. Assemblywoman Carter, we're going to turn the floor over to you. Thank you.
Thank you. Let me start by saying I applaud the three of my colleagues for continuing to do this and to put forums like this together. It is amazing. And also for the panelists, your wealth of knowledge is remarkable, and be able to take this now and share it out is truly something that we need to continue doing, not just today, but even moving into the future. So as it was stated, I am Assemblywoman Linda Carter. I am from Legislative District 22. I actually represent Union County, Somerset, and Middlesex County. Great county. I know Essex County is in the house, okay, up here,
Yes,
all around. We got
Yes.
Newark represented and all. But I'm gonna tell you, the state of New Jersey is truly important to all of us.
Yes.
And I'm gonna tell you something, planning is so essential. As an educator, I'm been educator for the last 17 years. I work in a high school, and I work with, and I'm actually a business education teacher. I'm work with the CTE department, and I'm out there working with our students, and financial literacy is so important. Understanding their numbers, understanding how they're getting paid, understanding how to go and get jobs, how they should present themselves, but most of all, how not to live paycheck to paycheck and what they need to do. And it's all about the plan. And I'm going to tell you, our panelists are going to go through that and really kind of help them. And I'm so appreciative to all of you being here. And as we go through the COVID-19 crisis that the entire state and our country is going through right now, listen, we're all in this. We're not on the same boat. We're in the same storm as everybody, but there are people that are different boats because we've done stuff differently in the past to make sure some, again, living paycheck to paycheck, some are just a paycheck away, some are having problems paying bills, some don't have any problems and are out there helping those all around us. And we need to continue that, but it's all about educating each other, educating ourselves to make sure that we can come together. So this is wonderful. We have millions of individuals who are paying their mortgage, but we have millions that are not. And it affects, it's all a ripple effect. So Budgetnista, I'm so glad that you're here, and Mr. Giblin, woohoo, we're gonna make sure that you're gonna give out all those resources. And when I look at it, you know what, Miss Ford, who's also one of my sorority sisters, hey, glad to see that you're here. As we look at it, and Althea talks about, what's going on in, when you get to that end of life, things, and it's all about planning. After all this is over, we certainly hope that it's sooner than later that we can get through this. You know what? And we've all experienced different levels of things while we've gone through this. But we all need to make sure that we're communicating with each other, we're educating our kids, and we have to be real with them. Me as an educator, I tell my students all the time, listen, you need to go home. I need for you to sit there and ask your parents, how much do you make? How much are you saving? What are you doing? Do you have a budget? How are you looking at this? They need to understand what the cost of everything is. They need to understand to put away for a rainy day. And you know what? They need to understand, because a lot of them want to be able to afford things like simple things, going on vacation, being able to go to the store and pay for something the same as somebody else, or better yet. And I've always believed since I was younger, I come from a single parent household where my mom worked 2 jobs. Listen, I've been working since I've been 14. I got to put some of that money away so that I can make sure that I can plan to get to college and do the things that I enjoy doing and I have control. Mm-hmm. So I'm so glad this discussion today hopefully will give everybody options, conversation, and it doesn't take away from things that are going on in the world, but it helps us to really take a better look that we can go into the future and really plan as we work through this. So thanks for having me here.
Thank you for being here.
Thank you so much, Assemblywoman Carter. And if you don't know, April is Financial Literacy Month. And today is the last day. And I just wanted to, before I have Tiffany, the Budgetnista, start speaking, I just want everyone to know that she was the catalyst in helping me get financial literacy into middle schools, right, grades 6, 7th, and 8th. She was the subject matter expert. I reached out to her and she was right there. And just last September, it was implemented, and now 6th, 7th, and 8th graders are learning financial literacy. And besides that, she is the guru. She is the financial guru. And I want Tiffany to just talk about the change that we all are experiencing since COVID-19 with finances. Please share some tips, some tools, some resources, because everyone that's on this panel and everyone that is watching, we need you. So without further ado, and I must say this because Speight told me to, Tiffany the Budgetnista, Aliche is from Newark, New Jersey.
Brick
And I
City.
welcome you to the floor.
Did we just say Essex County? So maybe we can claim her too. Essex has been working in the community for a long time.
Yes. It's just so crazy. It's all full circle. So before I started the Budgetnista in 2009, I actually was a preschool teacher here in Newark for 7 years. And I taught right off Dayton Street, South Ward, the poor forgotten ward. And it was intentional. I was born here in Newark and I was raised all over Jersey, but I came back here in my early 20s to live here and to work here and to serve here. And so even though I'm not in the schools anymore, I still feel like I'm an educator. So thank you for having me. So this is a really scary time for most people because we're hearing talk of a recession. And I think some people don't even know what a recession really means. And what it just means is that the economy is not doing well. There's an economic downturn for 2 straight quarters, which is 6 months. And so we're in about month 3 now. So they won't technically call it a recession, but it's a recession. Like the numbers have come out. Q1, we've seen a reduction in our economy by like 4.3%, something in that range. And anything below 3% means you're in recessionary territory. And so a lot of people think that COVID caused the recession. It did not. So recessions are a normal part of the economic cycle. And recessions happen typically in the United States anyway, every 10 to 15 years. And so the last recession was 2008, 2009. So we're like, 11, 12 years in? That means we were due for one. And I think especially with our community, we need to understand not just what to do with our paycheck, but what's happening overall. Because if you understood the economy overall, you would know, year 8, year 9, year 10, we are due for a recession. And some of the things I can do to prepare for what's going to be an economic downturn, not because I've done anything wrong, because this is just what the economy does. It goes down, it goes up, it goes down, and it goes up. So here are some things that you can do now that we're what's looking like the beginning of a recession. One, I call it my noodle budget. I'm like, you need to drop down and get your noodle on, girl, right? So your noodle budget is your baseline budget. That means your budget without the bells and whistles. I call it a noodle budget because at some point we all were surviving off ramen noodles, right? Maybe your ramen noodles were peanut butter and jelly. Maybe your ramen noodles were rice and beans, but you know what I mean, when you didn't have much, so you didn't spend much. So what does that noodle budget look like? It means you're really only spending money on the things that you absolutely need to. And sometimes that's not even enough. I have been in a place, I remember when the last recession, I worked at this place, Kretschmer Childcare, and it was at the bottom of a housing development, Kretschmer Elderly in, like I said, the South Ward. And they lost their funding during the last recession. And so the school closed. And I had nothing. Like I pulled my money out of my retirement to save myself, I had bought a condo when I was in my 20s to save the condo. I pulled money out of my savings, and within a year or so, everything was gone. And so it's easy to say, oh, budget, but there are moments when your bills are $3,000 and the money you're bringing in is $1,500. There's not enough budget in the world to get $1,500 to stretch to $3,000. And so what I tell people then is that you make the hard decisions and ask yourself 2 questions when you're deciding who's not going to get paid. Sometimes you have to furlough some of your bills. That's just real. So I had to decide who's not going to get it. Who's not going to get it is you want to make sure you're paying for the things that are going to help you maintain your health and help you maintain your safety. Verizon can wait sometimes. Sprint can wait. These are places that can wait. They're not going to be happy about it. And your credit is going to go down a little bit, but it's not difficult to raise your credit score back up. What's most important is to make sure that you are healthy and you are safe. So figuring out your noodle budget, if that's not enough, that living on your essentials is not enough, then truly get down to the essentials of what you must have to be healthy and safe. So that's 1. 2, if you're fortunate in that you do have a job right now, that's great. You need to be saving like crazy because we don't know how long recessions last. You don't know how deep they'll go. You don't know even if your job is promised. No one's job is promised. When I lost my job as a teacher, literally teachers don't lose their jobs. We are essential workers. So I was shocked. It was 3 days before the new school year. So had I known, because I lost my job 2009, the recession already hit in 2008. I wasn't preparing because not me, not me, the teacher. And so it happened. And so I wish I had been saving. So right now I need you to be saving. Ideally, I'd like for you to separate your checking account and your savings account in 2 different banks. So your checking account can stay at your normal bank, but I prefer people to open up a savings account online because it makes your money inconvenient, because that transfer back and forth is about a 24-hour wait. So you won't be using your savings when you're not supposed to.
You want to.
And also they pay out more interest because they don't have an online only bank, doesn't have the overhead of like a normal bank. So they pay out more interest. So saving your money in an online only savings account. You might be asking where should I find an online only savings account? There's a website, magnifymoney.com, like magnifying glass. So magnifymoney.com. And savings accounts should be free. It should have an A. Magnify Money rates them from A to F. Don't nobody want to see bank. Get yourself an A bank. 2, make sure your money is FDIC insured. So that means that if that bank were to close, you will get your money back up to $250,000 per bank account. So I see people especially our people are like, ooh, Tiffany, I'm taking all my money out of my bank account and putting it where, sis? In your mattress. So if the house burns down or someone steals your money, it's not insured. But if you keep it in the bank and something happens to the bank, you'll get your money back up to $250,000. So keep your money there. So A, FDIC insured gives you the highest interest rate and the lowest required deposit. So many of the banks you'll see will say, in order for you to get this interest rate, you have to open with $10,000 or you have to keep $10,000 in this bank. We don't want that. You want a bank that you can open with $1 and you have to keep nothing in it in order to receive that interest. So that's 2, save. 3, reduce your debt payments. A bunch of people are telling me, I'm going hard on my credit card. And normally that's a great idea, but not right now. I want you instead to give your credit card payments their minimum and your other debts its minimum, and put the excess in your online only savings account. Because like I said, cash is queen during a recession. And I want to make sure that if something were to happen, you can grab your money, because debt-free and no savings equals debt. Because if you're debt-free and you don't have savings and your car breaks down, you look at your savings, there's nothing there. Then you look back at your credit card and you're going to swipe it anyway. So I much rather that you put the money in savings, because if you swipe your credit card as a savings account, they're going to charge you an interest on top of that. So I would reduce my payments to debt and save that money instead, up until I have 6 months of emergency savings saved. Once you have 6 months of your noodle budget saved, of your essential spending saved, then you can go back and be more aggressive with your debt. 4, call your service providers. Everyone knows it's a pandemic. Everyone knows COVID's out here. Everyone knows that people are having hardship. So call your PSC&G, call your landlord, call your mortgage person, your insurance, call all of them if you are negatively affected by what's happening. Your finances are negatively affected, and share that. Because anyway, almost every service provider has a financial hardship program. Mm-hmm. But especially now, they are open because they know people are struggling. Mm-hmm. They can do things like freeze your interest. They can actually erase some back pay. They can freeze your payments. They can reduce your payments. They have all these tools available to them. Don't suffer in silence, and don't just stop paying. Call and ask for help. And last but not least, insurance. There are a number of people that I know, unfortunately, that are no longer with us as a result of this terrible virus. And people don't expect not to be here. But you want to make sure that your insurance is there to protect your family when you're no longer here. I personally don't believe that insurance is an investment. I think insurance is risk management. And that I think that the best insurance for most people is term, because it's more affordable. And you'll be able to cover more of what of your income that you normally bring into a household, what would no longer be there if you're no longer there. So for example, ideally you want to leave your family with about 10 years worth of your income. So let's just say you make $30,000 a year and your mom or dad in the household and you're not here, you want to make sure that 30,000 times 10 years will go to your family. So you're not here, but your income will still be coming. So that's $300,000. And you also want to get insurance to cover if you have debt. So let's just say you have a mortgage or private student loan, something that's not going to be forgiven if you're not here. And so you also want to make sure your insurance would cover that. So if you do those 5 things, noodle budget, save, reduce your debt payments, call your service providers, and really look into life insurance, you can not only survive what's happening now, but thrive through it.
Oh, thank you. Thank you.
You're welcome.
Yes. Timberlake?
So thank you so much for that, Tiffany. You are amazing, and you always have been. Tiffany also taught me a lot about money before Tiffany blew up. She used to come and teach financial literacy for homeowners and first-time home buyers for me, and I greatly appreciate that. And I know the Community Land Trust members do too. So shout out to you all. But thank you so much for that, Tiffany.
You're
and
welcome.
I have my online banking account because you told me to do that years ago.
Good.
Thank you for the tips. So this is really just broad, and it's in regard to relief options. And Teddy, I know you were telling me something about the CARES Act and different things that are in it. The stimulus check. We have issues of unemployment insurance, and you know that those who are applying for unemployment, we are asking people as much as you can be to be patient, because the system is so incredibly overwhelmed. And I recognize how that sounds, asking someone who is in need of money to be patient. But the system is so overwhelmed. People are going to be able to get an extra $600 a month, though, on top of what their amount for unemployment insurance is. But we are all actively working hard at the state to get you your money as soon as we can. And then there's the issue of student loans. I was excited to be able to call and get some deferments going on, right, during this time for COVID. Credit cards and mortgage relief, forbearance and housing. You've heard us all talk a lot about that. And then just, tips about how maybe to use the stimulus check. Are you supposed to just, let's now we're gonna ball out and go on Amazon and order up everything that we can possibly imagine? Or is it about transferring it into that savings account, or paying the mortgage or rent? And then also there's a lot of scams happening. So that's a whole lot that I just threw out there, and it's really for anyone who would like to speak to that. Hello, don't all speak.
No, I don't want to jump in. Okay, well, I'll just
Teddy, Tiffany, would you like to
No,
speak?
I feel like I just spoke.
Yeah, who could tell me about the Teddy, can you tell me about the CARES Act? And
Sure.
Tell me what you were telling me. You shared some things with me in regard to retirement and the CARES Act.
Yeah, and then Tiffany, tell us about how to spend this stimulus check.
Okay.
Yes.
Okay.
All right, I'll go first. So really what it is, we had talked about this earlier, but it's a stipulation that in the normal course of things, this is something you never want to do. Obviously, when you have a retirement plan, such as a 401k through work, a 403b, an IRA, et cetera, those are type of accounts that you really don't want to hit up until you retire. And typically what the government has are pretty strict regulations with regard to penalties and other tax implications if one were to withdraw those funds prior to a specified retirement age. Obviously, the CARES Act has had a big impact on people's household income. It came out, and there are people who are hurting and in need of additional funds. So what the CARES Act did, the CARES Act was the comprehensive act that was signed on March 27th by the president. What it did is it allowed for folks to be able to hit up their retirement accounts up to a specified amount of money if they could, prove hardship. So the ability to prove hardship or a need for this is pretty broad. So I think most people would qualify. But obviously this is something you want to look closely at, because if you are taking away from your retirement account, this will have an impact later. But if some folks out there have no other option, it is something to look at as a source of funds for the time being.
Okay, so
Thank you.
people can tap into their retirement accounts, but only do it if it's a last resort, and there's lower penalties for doing that than if there weren't a pandemic going on right now.
That's right. So whatever dollars come out of the account will still be taxable. That's always going to be the case. But typically in usual circumstances, people who pull out of retirement accounts prematurely are going to be hit with an additional 10% penalty. So that 10% penalty is waived, assuming you can meet certain criteria within the next, for the remainder of 2020.
And to just stay on that topic, if you could tell me a little bit more about retirement accounts as a whole. Sometimes it's hard to make ends meet, and you might have more month than you do check. And many people have felt like they can't save for retirement. They're trying to save and live for now. But do you have anything to offer as far as knowledge about retirement and savings, and what anyone can do to actually accumulate wealth or funds to be able to take care of themselves when the inevitable happens, which is getting old?
Yeah. So the reality is the landscape has changed over the last 20, 25 years, where defined benefit pensions, or the traditional pension benefit that people had through their employer, have more or less gone away. There's very few companies that offer a traditional pension. And as we all know, you Assemblywomen, that the state pension plan has its own, host of challenges. So I realize right now might not be the best time for people who are really at an economic disadvantage, but eventually when things do turn around, and you may look at your situation and say, I don't have any money to save, or I'm not an investor, I think most people could probably find $20 a pay or $20 a month that they could set aside in some sort of retirement account. So if you work somewhere, if you have a 401k, even if you don't have a 401k, you could set up an IRA at your bank or a brokerage house. And it really isn't so much for, saving a ton of money. Just start with something that works for you. I think Tiffany would agree that starting small is probably the best way to go. And then obviously, as your circumstances change, as you're able to save more, obviously to do so.
Perfect.
You also have to take a look at it when you're doing that. Look at really the full impact that it has on the actual amount that you bring home. Because a lot of people, they don't realize that once you save and it's before taxes, your impact of your home, your net pay is really probably just a couple of dollars versus the total amount that you are actually taking out. So it's very good to make sure that they're in touch with someone that can explain that to them and really take a total look at it.
Yes, I think people think that if they say they put, $100 a month into their retirement account, it's going to make their check less $100 a month, but it's not that way, because you're also reducing your tax responsibility when you put that $100 up. So let's just say you make, for the sake of easy math, you make $10,000 a year, and you decide, I'm going to put up $1,000 a year for my retirement. So normally the government says, you make 10,000, I'm going to take taxes from 10,000. But if you put 1,000 in your 401k, your 403b, this is pre-tax money, then the government says you didn't make 10,000. We're just going to tax you on 9 because you put up 1,000 in your retirement account. So as a result, you're not, the tax responsibility is not so heavy. So maybe normally your taxes would have been, I don't know, $3,000, but maybe they're $2,500 because you put up money. And so it's important, because people will always say that they can't. I get it. When, like I said, I know when I lost my job as a teacher, I was unprepared. And I remember that, like, before that, I wasn't making a ton. I was making maybe like $39,000 a year. So in Jersey, other places maybe, but the Northeast, that's not much. And so, but still, I was young and I was single and I have a kid. So I was able to manage. But then when I lost my job, I realized that savings has to be a habit, or you will make an excuse never to save. And I told myself, I don't care if I was literally transferring 25 cents, 50 cents into my savings account, not because I thought 25 cents or 50 cents was going to make a big deal, but I wanted to never get rid of the habit of savings.
Right.
You know, it is your younger self's job to look after your older self. So I've named my older self, so it helps me to like to connect. I named my older self. Her name is Wanda. And I just see Wanda's like sassy old lady on the front porch here in Newark, you know, talking to the kids like, you better not throw that ball this way, you know. And so I think about Wanda and I think to myself, Tiffany, you're 40 now, that you could either work a little harder, sacrifice a little more, or you can go into Wanda's purse and take money out her purse. Would you take money out of your grandma's purse? You wouldn't, but effectively that's what you do when you take from your retirement, that you're going into your grandmother's purse and taking money out versus figuring out what you can do now while you still have the ability to do something. Is it going to be hard to do something now? Yes, but it's even harder when you're 70. It's even harder when you're 80. Like take on the hard when you're 40, 45, 50, and you're able, you know? And so I just remind people of that, like, yes, it's hard, but it's just that much harder if you wait until you're older. Don't put the pressure on your older self to have to look after your younger self. It's supposed to be the opposite way around.
Yeah.
And that's why it's important too that we're teaching it not just in high school,
Mm-hmm.
you know, which is really important because a lot of them are starting to get their first jobs, understanding, listen, what am I doing with this paycheck? I know, and we have so many of our youth that they're working and going to school, but they're working and they're putting into their household. They are really helping to the household to pay the bills and for, you know, helping with their brothers and sisters. But what needs to happen is they have to understand what they need to be doing with it and start at that point to be able to save and see the impact of putting a little bit away. But it also, that's why I'm so glad that the legislation last year that was passed, that, you know, we bring it back to the younger grades, because the earlier you start, they get to know the terminology, they get to understand, and it, you know, they soak it in.
Mm-hmm.
And then when they start actually working and have the ability to do it, think about it. When all of us finished, you know, got out of high school or college or trade school or got our first job, what was the first thing you wanted to do? I got to get out of my house. I want to go get my own apartment. I want to do. They got a plan. It's all about planning. And I think that that's why this conversation that we're having is so crucial. And as the educator, it's important. I cannot. Okay, so before we started this, it was like, well, what can I do with my kids? My kids are at home, you know, and I got to work and everything. Some tips. One of the things is it's planning. Plan one day to, you know, sit for a half an hour or so with your kid to have those financial conversations to see what's going on, and give them like little tasks while you have you know that you're going to have a conference call for an hour. Have something planned and conversate with them prior to. And then give them maybe a little task that they can do on the computer to go into looking up some of these financial information, finding out, you know, some of the jobs, you know, they may be interested in, what salaries are, what the cost of things are. So it's just a matter of all planning.
Mm-hmm.
Thank you.
Yeah,
Thank
one
you.
thing that I talk to my clients about, you know, on a regular basis is a pretty simple concept, but, you know, when you're planning for your budget and your, you know, financial future, you always want to consider things from the aspect of having money in 3 buckets, or, you know, perhaps 2 for some people, but having money in short-term assets, you know, something goes wrong, you need to tap in and have access to funds. Intermediate, so say your goal is to buy a house in 5 years, you want to save for that. And then obviously long-term, when you consider my retirement, you know, I'm 40 years old, I'm looking to retire in about 25 years. And obviously the way you can invest and put that money and place that money is going to have an impact, but you always want to try and compartmentalize things. And I think that's sort of what Tiffany said. I agree very much with having those online accounts, because it's just a little bit harder to get at that money. And, you know, it's certainly good for intermediate and longer term purposes where, you have a planned expense that, oh, okay, I'm going to buy a car next year. And, you know, you can work your way, get your money and have it. But that's sort of a way that I like to explain it to folks.
Well, you're absolutely correct, because of Tiffany, I do have an emergency account. I have an online savings account, and I have an account just where I put money to pay me. And once that money is gone, I don't go into my other account. Plus, I have a deposit account where all the money goes. It's not a lot of money, just to let everyone know. But I have a deposit account where the money goes. And like my vacation money, I'm going to be able to use that for because I'm not going on vacation this year, but the money that's there, I can use that for something else. Like I can move some of that money now over to my savings account. So, and I only put like, every time I get paid, I put $25 in there. And I have one account where I just have $15. So you don't have to put $1,000, $10,000. You can start with $5, like Tiffany said, $1.25. So I've been using your tips, Tiffany, for the past 5-6 years, and it has been helping me. So thank you.
You're
so
welcome.
Tiffany, I just need for you to tell everybody, because a lot of people are watching, how do we spend that stimulus check?
Honestly, at first, you just spend it on the essentials. So if rent is due, pay rent. If you need groceries, get groceries. So just the essentials. And if you're fortunate that you're like, I actually am good on essentials, then I would be saving it. And if you're like, I'm someone who, the essentials are good, and I do have my 6 months of essential expenses saved, then I would consider looking to increase my money to my retirement account or to invest for wealth. But that only comes when you take care of what you need to take care of now. And if that's good, that you've set aside for the future. And then if that's good, then you can consider, what investing might look like. But, you want to make sure that nothing's more important than your health and safety right now. The other things we can get to, I remember when, before the recession hit, my credit score was like an 802. I was feeling good. I have an 802 credit score, and I kept putting money toward the condo, hoping that somehow I figured some magic thing out. My retirement account, I think maybe I had $50,000 in my retirement account, maybe. And I lost 10% of that plus another 30% of it because I lost to taxes. So 10% fee, like 30% to taxes. And then on top of that, it just was really hard times. And I remember, so I didn't want to lose my condo because I just said, if I lose it, not that where would I stay? I was fortunate that I knew my parents lived in Jersey, that I didn't want to, but I knew I could stay with them if I had to. And so if I would have known what I know now, I would have went back to 29-year-old Tiffany and said, girl, keep your money in your retirement account, keep your savings in savings. Unless you have a job that's coming, you're going to lose this house. Where's this magic money going to come from? You're going to keep paying this money. And they took it anyway. So I could have kept my 50 here, kept my, 2,000 in my savings and moved back home, which is what I ended up doing anyway. I kept throwing, like the old folks say, you throw good after bad, So I can't express enough how important it is to keep as much money as possible during times like this. And even if it means your credit score drops, I remember thinking, what am I going to do if my credit score drops? I mean, as if like I'm going to die. And yet here I am breathing.
Right.
Like my credit score dropped. And you know how I found out, which is so embarrassing. I was teaching.
Doing well. You're breathing and doing well.
Exactly. Yeah. Right. And so I found out I was teaching for like 3 years. I taught financial education at the United Way. That's where I met Angela. And I used to teach like a 6-week course, like sometimes twice a week, like a Tuesday and Thursday course. And I remember I was showing people, this is how you pull up your credit score. So it was like a website, I think it was like Credit Sesame or Credit Karma. I'm pulling it up. I had not checked my credit score in like a year or so, because I just knew I had 802, forgetting, girl, you went through a foreclosure, pulled it up, it said 547 on the big screen. I was like, meanwhile, I'm here teaching the class. I was like, oh, I must have logged into my sister's account. But that was like, oh my gosh, my credit scores are 547, and yet no death happened. And yet it just meant that people were not going to trust me to borrow money, for a little while. And then I worked on my credit. Like, it's because I couldn't afford all of my expenses. I chose what I could afford and I left the rest. And yes, some bill collectors certainly will try to harass you, but I was quick with the cease and desist letter. Mm-hmm. Know this, that just because you owe someone doesn't mean they have the right to mistreat you. I'm going to say it again because it's important. I think we think like, well, I do override, and you do, mm-hmm. but it doesn't mean that whatever bill collector that they've sent for you has the right to mistreat you and harass you and call you at your job and call you at your mom's house. No, you Google cease and desist letter and you fax that bad boy of, this is how you can contact me. You should always provide a way. You can email me or you can send me a letter, but you are no longer allowed to call these numbers. And it is illegal for them to do so. And I say fax it because when you fax it, it goes immediately, and then you fax, you get like a receipt, and they know because there are laws in place that mean that they are not allowed to continue to call you. And so that's what I did. And then when I had
a job,
Yes, because I remember there was a young girl when I was working at the daycare center. She was young, maybe like 22, and this bill collector kept calling her every day at the daycare center. And we didn't have call waiting. So if you call, that means a parent can't call. And I remember she was so nervous and she was like, what do I do? They keep calling. So I picked up and I was like, you're not allowed to call her at her job if she requests for you not to call her. Well, who are you? I said, I'm the director of the center. Well, do you know that I said, you're also not allowed to tell her business. Do you know the law? And, and I told her, I said, don't worry about it, sir. Well, you'll be getting a fax today. And sure enough, we had a fax machine, we sent it, and the call stopped. So it doesn't mean that you don't handle your business, but you are allowed to do so with dignity, And so you can work out a payment plan. So that's what I suggest to people. Yes, work out a payment plan, pay what you can. And now my credit score is back in the 800s, but it's possible to recover. It's easier to recover from a bad credit score than it is from bad health because you didn't take care of yourself. So put yourself first, second, and third.
Right.
Thank you, Tiffany.
With mental health too.
Mm-hmm.
Yes.
Absolutely.
Okay, so we want to engage and switch gears and talk about another very important topic. So Speight, can you take it away so that we can begin to talk about this?
Yes, Althea. I know she.
Hi there.
Thank you. I know you're sitting there patiently waiting.
Quite all right.
Right. This is one of the most touchiest topics that we have to talk about. And of course, thank you for coming on and have this big discussion with us. During COVID-19 impact on funeral proceedings, can you go into some detail in how this has been going on, the funeral homes and what the process has been?
Sure. So first, thank you very much for allowing me to be a part of the conversation tonight. Unfortunately, conversations surrounding planning are predominantly, talking about life planning. But in my industry, it's also important to identify that there is a value to planning for end of life and, even, your funeral and disposition arrangements. I think one of the challenges with many families is the idea it's almost taboo in the sense that, if I talk about death, it's going to happen. And that's, it unfortunately just kind of like one of those wives' tales that just travels throughout, generations. But it is extremely important that we're having conversations about not only what kind of services you may want, but also who should be making the decisions about them. Because I can tell you, at least from my experience at the New Jersey State Funeral Directors Association, we have it's called the Manager of the Day line. And basically anyone can call our office if they have questions about funerals or the funeral industry and things like that. And so just over that hotline, if you will, I have heard so many stories of just basically messy family battles that come up because individuals are so nervous in life to talk about these matters that then their loved ones are the ones left behind bickering and, quarreling over the casket and things like that. So as much as is possible, we would, encourage that when you're thinking about your planning, you're thinking about your budget, you're thinking about, all of those things, life insurance and things like that, that you also consider taking that next step to identify, well, what would I want for my funeral? How do I want to be memorialized? Do I want to be buried? Do I want to be cremated? Do I want that to happen in my home state? Do I want, my remains to be, my cremated remains to be spread, overseas or something like that? So it's just really important that we're encouraging those conversations. In terms of what's happening right now on the ground with respect to COVID-19, I'm actually reading through some recent guidance that was issued by the Mortuary Board, which is the board that licenses funeral directors, about some changes to an existing executive order that has dictated how funerals are to occur. So for those of us that may have experienced a death, right now, you're limited to 10 or less individuals to be gathered for a service. And in addition to that, the previous guidance that was issued last week noted that you could not have an open casket in-person viewing, visitation, or ceremony. And so there was a lot, as you could imagine, there's been a lot of upheaval about that idea, particularly for individuals that may have passed due to COVID, because they may have been separated from their loved one for an extended period of time. And so now when it's time to kind of lay them to rest, they're not given that the full experience of being able to see their loved one and kind of come to terms and acknowledge that the death has occurred. And so actually, there is some recent guidance that's now going to be channeling through. I know that the governor commented on the press conference today, his daily press conference, about needing to revisit that particular guidance about open versus closed casket. So we'll be seeing some changes starting tomorrow on how that is operationalized in the field. I can definitely tell you that it is a challenge for funeral directors right now, because I guess what consumers are used to in terms of funerals are also what funeral directors are used to in terms of funerals. And so our ability to provide that support and that emotional support and guidance, it's being stunted because we either physically can't meet, or just because of the concerns around the virus and limitations on gatherings, we're not truly able to engage families the way we're used to and the way we've been trained to. So it has been a lot of kind of on-the-job training for us as well, and having to adjust. But many funeral homes are, stepping up to the challenge and trying to identify ways that they can still be of support to their consumers, but also needing to be mindful of the seriousness of this disease, and making sure that not only mourners are safe, but funeral service personnel as well. Unfortunately, we've experienced some loss in the industry related to COVID. So it's a real tangible concern for us that we need to make sure that not only are families able to properly grieve, but that as part of that post-mortem system, funeral directors are properly protected so that dispositions and funerals can continue to occur. Because if we're knocked out of that process, it then creates a serious issue with the system as a whole.
Wow.
Just another question. Usually the time frame is sometimes a week. What is the expected time frame people have to wait now to bury their loved ones?
Sure. So we know that, and based on the Department of Health, which kind of outlined last week in their directive, kind of how they wanted to see the post-mortem system kind of operate. They've noted that as a general rule, that dispositions should be occurring within 7 days of the date of death. And the rationale for that is, at this time, the guidance is that we should not be delaying memorialization. And what I mean by that is, for instance, you may have a family that may say, well, you know what, I'm not gonna call, my loved one has died today, I'm not gonna call a funeral home. I'm just gonna kind of let them stay where they are, and I'm gonna hope that this all blows over. And, in a couple weeks, we'll, outside will open back up, and we will be able to have the funeral that we want. And the reality is, we can't gamble like that. That cannot be the decision that any family member is making. Like we really have to be mindful of timely dispositions, but also recognizing that memorializations don't always have to be married to a physical body. I mean, we're very much accustomed, particularly in Black and Brown communities, that, you are showing up to a funeral, you're seeing a deceased individual in a casket in front of you, you're mourning, and then the next day or later on that day, you're going to a cemetery. that's not going to be the experience right now, but that doesn't mean that you can't gather later once the state of emergency has been lifted, to do a larger gathering. I think one of the things that the pandemic has really kind of highlighted is the idea that grief is a process. And so while we are physically unable to gather in order to, kind of grieve as a community or as a family of this loss, sometimes we relegate that experience to the single funeral moment. And then after that, family has dispersed and it's just kind of life as normal, except for the people that may have been, directly connected to that decedent. And I think what the pandemic is kind of calling us to do is to say, no, this needs to be a longer process. While there's still a need to tend to the immediate, burial or cremation and kind of handling the remains themselves, it doesn't mean that we're stunted in our ability to gather and to mourn. It's just going to be over a period of time because of the limitations of gatherings at this time.
Right. And I don't think that people realize that the funeral homes are individuals that's on the front line as well. So we just thank you for doing the services that you're doing now and just helping these families out, during this time. So thank you so much.
Sure, of course, of course.
Thank you. Thank you.
Thank you so much, Althea. The information you gave is so incredibly important and powerful. I know you all are working so hard, and you also have to work to keep yourself safe too. And I think a part of your work is dealing with the families who may not have been financially prepared for the death. I see things online, for GoFundMe pages for people who have been deceased, and their families are trying to raise money for that. And I think it's a good transition to fold Teddy in to have a dialogue, maybe even along with you. And I know that Teddy has some slides he'd like to show too, as it relates to insurance and life insurance. How is it that we can prepare for death on any budget, and what are the various different insurance options, especially as COVID is happening now?
Sure. Thank you, Assemblywoman. So really what it comes down to with regard to insurance, a lot of times we talk about in our business, people ask, well, what's the best type of insurance? And really the shorter answer is the one that's in effect the day you die, right? There's all different types, but I'll give you a quick overview of a simplistic version of, the different types of coverage that are out there. So I'm just going to share my screen here for a sec. Can you see that?
I still see you.
Okay, hold on a sec.
There we go.
You see that now?
Okay.
Yes.
Yes.
Okay. So let me just go back to where
Oh.
I'm starting. Okay. So basically, the whole idea about life insurance, obviously in all communities, there is sort of a taboo at some times where people don't like to talk about death, as was discussed earlier. But life insurance essentially is a financial product that provides a death benefit to intended beneficiaries upon the death of the insured. So life insurance provides a level of protection, financial protection for your loved ones. Different reasons why people typically buy life insurance or have life insurance is for income replacement. All right. So if you're not out earning an income anymore and you're knocked out of the picture, how's your family going to stay in their house, going to pay their bills, going to do what they do? Obviously, pay off debts, as was alluded to earlier. You don't want to leave your family holding the bag with any debts you may have accumulated during your lifetime. And a big one that ties into what Britnee just said and Althea just said is, in the event of an unexpected death where someone passes away and final expenses are an expense that came out of the blue. So all those things are the typical reasons why people would buy life insurance and have life insurance in effect. In essence, there's two main types of insurance, term insurance and permanent. Both have their place, but essentially where term insurance comes into play is it is the most cost-effective insurance. So you get the most bang for your buck, so to speak, with term insurance. Term insurance is life insurance that pays the death benefit in the event of insured's death during a specified period of time. So it could be something like a 10-year term, 15-year term, 20-year term, or 30-year term. People who have a life insurance benefit through their employer typically have, a base benefit while they're working there. Could be one-time salary or two-time salary or some other multiple. But essentially that typically is available for full-time employees only. And that goes away if something were to happen, if someone got laid off or let go for whatever reason, or someone left that employer. So that's important to look at right now during the time we're dealing with, where, there have been folks in our community who have been furloughed or laid off in their particular job. So if you had insurance through your job and this was something you were counting on, now might be a time to revisit what you had and see if that if you're properly covered. Permanent life insurance is life insurance that offers lifetime protection and potential for cash or account value accumulation. So term insurance works well when you have a temporary situation. So take my situation as an example. I have two young kids, age 11 and 7, both girls. And really what I have to be concerned about at this point is if something happens to me, I want to make sure that my family has enough money to stay in the house and do what they want to do as far as getting my kids brought up. But I also have permanent insurance where the inevitable is going to come someday, whether the inevitable comes when I'm 50 years old or when I'm 95 years old, at some point in time, I'm going to pass away. So permanent insurance sort of solves the issue where what happens if something happens to me way down the road. Couple things you want to look at as far as right now. So one of the things that I think is probably universal over these last few weeks is that every single one of us has considered our own mortality or that of a family member in recent weeks in a way that perhaps hasn't been done in many years. So while you're thinking in that respect, now might be a good time to think about getting some insurance coverage in place if you don't have any, or getting the proper amount. Or if you already have coverage, there are a few things you want to obviously look at. So has your health improved in recent years? So if you quit smoking or lost a bunch of weight, a lot of insurance companies allow you to get coverage to get reductions in the policy price by virtue of that. Are your beneficiaries up to date? So suppose you took out the policy many years ago. At that point, you named your family member who since passed away, or you named perhaps a former spouse as your beneficiary. Is that something that perhaps you want to review at this point? And then obviously know who your financial professional is, and has your carrier maintained its financial strength. So I'm going to stop sharing now, but just to kind of talk about that, those are all things that you want to consider. So typically with life insurance, you'd have to go through the process of getting examined medically to make sure you're qualified for the policy. But there are insurance policies out there that are not, medical is not required. So there are different options as far as getting the right coverage in place. But I really would just want everyone to know that no matter what your budget, there are options for life insurance. And certainly during this time, tying into the things that the Budgetnista talked about and make sure you're budgeting properly. If you have all the great plans and you're budgeting properly and something goes wrong, that's where life insurance comes into play. Life insurance is tailored for, when something doesn't go according to plan. If you don't make it to retirement and you have loved ones to leave behind, that's where life insurance is going to be an important part of planning consideration. So that's really what, I wanted to just give, a very broad overview of insurance. This is something, if you work with an agent, certainly you can, it might be a good idea to reach out to the agent and just go over some of the things we talked about. If anyone wants to reach out to me, I'll make sure that all the Assemblywomen have my contact information.
Yeah, well, if you can share it right now, that'd be great and helpful to people. If they have follow-up questions, they can always call you.
Yeah, so if anyone wants to reach out to me, here's my contact information. I am based out of Essex County. My office is in Fairfield, and that's my telephone number, 973-439-6052. If you have general questions and you want to just, bounce ideas off of me, that's fine. And if I could help anyone, I certainly will.
Thank you.
Essentially,
Thank you.
Can I ask a question? So,
of course.
I've been hearing from quite a few people, people dying unexpectedly, before COVID, now, and their loved ones can't find their insurance policy or not knowing if they have insurance. So if a person does have an insurance policy, is it a way that you can find out if they have a policy? Is it a way that you can look it up, or I'm just not sure. How does that process work if you just don't know?
Yeah, so if someone doesn't know if they had a policy, obviously, the state of New Jersey has an unclaimed property fund that these sort of things would go into. But that's one of the things that if you are doing planning, you may want to have a file somewhere where people in your family know what you have. Do you have an online bank account? Maybe it's some bank that you get statements emailed to you electronically where you're not getting something at home. What people probably would want to consider doing is creating a file or, a list of their different policies that they have out there, even if it just has the company name and the policy number, that should something happen, the survivors can, have a roadmap of where to start to claim the benefits that the policy has.
Right. I understand that, but we have a lot of old school people that just don't communicate sometimes. So I just wanted to see if they can find that information, but okay, got it.
Yeah, and then as legislators, what we will do is we will get that information from the state as unclaimed property, and we'll definitely share it with all our constituents. I mean, the panel you all have been great. We heard so much information from everyone. So before we close out and give our final thoughts, we want the panel to give any final thoughts, anything that you wanted to say earlier, because we have a lot of people that are watching, and I'm hearing that everyone is enjoying the information that they are receiving. So please continue to drop one more golden nugget to the community. And we will start with Ted.
Okay. Really what I want people to know, obviously this is a very scary time. These are challenging circumstances. These are issues that none of us, at least in our lifetimes, have ever had to deal with. But really what I want people to know is that in spite of the challenges we're having, that, at some point there will be a brighter tomorrow, and we will get past this. And hopefully, in our own way, we'll have learned some lessons that could help us plan properly for the rest of our lives, in spite of what's happening now, and to, appreciate what we have.
Thank you. Ms. Ford?
Sure. So I think just a takeaway from this is that, even though COVID-19 is kind of what brought this conversation to the forefront, the idea of planning in advance for your funeral shouldn't necessarily just be confined to conversations happening right now during the state of emergency. There are many individuals that take advantage of planning in advance for their funerals. And I know I can tell you that the association, we do run the New Jersey Prepaid Funeral Trust Fund, which also manages over 50,000 accounts, particularly for individuals that are applying for Medicaid, because they are then able to set aside that money in advance, and it's not viewed as an asset for eligibility. So there are benefits to thinking in advance about how you can plan for your funeral that can protect you. And then also too, just having the conversation and identifying who you want to make those decisions for you. Because again, the more you can do in advance, it really does help to lighten the load at the time of death, because everyone's going to be grieving you. And I think sometimes a lot of people are so disheartened that they feel like, oh, well, I don't need a funeral. Nobody's going to care. Nobody's going to bother. No, you are that important. You are that important to be memorialized. You are that important to be commemorated. And so taking the time to think about what you would want and communicating that to your family, and then also identifying the funds, that can be set aside for that purpose will go a long way, so that your family can truly focus on the fact that they've lost you and not then have to worry about how they're going to make ends meet.
Thank you. Ms. Tiffany?
If I could say anything, the thing that always helps me when I feel like things are unsurmountable, there's an African proverb that says, how do you eat a whole elephant? And it's one bite at a time. And so something that helped me, 10 years ago when, I lost everything was, once I kind of dusted myself off and said, okay, I don't want to stay here mentally, physically. I don't want to be in this place anymore. And I was trying to do all these big overtures and it wasn't working. So it was disheartening. So I started doing something that I call my daily deposits. And that just means that every day I did one small thing toward my goal. So I would write down, my goal is if I could just make $500 a month with the Budgetnista, or my goal is if I could find a place to stay, or my goal is if I could make this $20 last us 2 weeks. Whatever that goal was. And some of my goals were big and some of my goals were smaller. And then every day I would look at my list of goals and I would tell myself, what deposit are you going to make? Because you cannot reap what you do not sow. You cannot harvest what you do not plant. You cannot receive what you have not given to yourself. So what are you going to do every day? And it doesn't have to be something big. It could be a phone call. It could be watching a YouTube video on a specific thing you want to learn. It could be a Google search. It could be a class that you take online. It could just be thinking about it. It could be making the list. Then a daily deposit every day. And eventually you make enough deposits and you're able to finally withdraw the type of life that you want to live. But it starts with you making those daily deposits. You have the capability and the ability to change your life around. And it's not going to be easy and it's not going to be fast, but it's going to be possible.
Thank you so much, Tiffany.
You're welcome.
And, Assemblywoman Carter, do you have anything else that you would like to say to everyone?
I just want to take an opportunity to thank the panelists for being here, and also the hosts, my colleagues, because this is information that is truly needed. I know that we are going through the pandemic, and sometimes you feel as if everybody's coming together just at this moment, but this is information that needs to continue. Once we leave here tonight, once we're into, and once we get through this, because we are going to get through and we're going to get through it together and we're going to collectively work together. But I just also want to remind everybody, there's one very important thing that helps us to get resources for during this time and just our everyday life. We need everybody to complete the census. So if you have not completed your census, I challenge each and every one of us to reach out to 10 people, 10 of your neighbors, 10 of your family members, no matter where they are, and ask them also to reach out to 10. Have you completed that census? So if you haven't, there are 3 ways. You can do it by mail, by phone, on the internet. Go to 2020census.gov and get that filled out. The last thing that I'm leave everybody with is it is a matter that many individuals make sure that you're registered to vote, and that there are some elections that are in May. Make sure that you do your vote by mail if you haven't received it, or you're inquiring about that. But also the June primaries been moved to July. Make sure that people are registered to vote in July. Make sure that they are also, if they don't want to go to, if we still can go at that point and do it at a voting booth, but we don't know what that's going to hold because of the pandemic right now. Be willing also to do vote by mail. And that's it.
Thank you.
Thank you. Speight?
Thank you, Assemblywoman. First, just thank everybody for tuning in. I just hope these conversations are helping you on a weekly basis. Each and every week, we'll be having a different conversation. I know people are just pulling on, everyone for different information. on a daily basis, but we're trying our best to give our constituents what they need. And like Althea said, you are important enough, and we do care about you. So, you know, we are all in this together. So I pray that God encourage each and every one of your hearts as we get through COVID-19. So we'll see you next week. Angela McKnight, turn it back over to you.
Thank you. So tonight's panel was about hard, necessary conversations.
Right.
Wow, COVID brought us up to this point to have these conversations. We must remember that we are here for our loved ones. We are here for ourselves. We have to take care of ourselves, our mental. So after this Zoom is over, I want you to just take 5 or 10 minutes just in silence, like 5 or 10 minutes. And just know that when you plan now, you're planning for your future. And we are all, I keep saying this every week, we are all in this together. And I just want to thank the panelists for being here and sharing all of your knowledge and your wisdom, because these are tough conversations, from money to planning to tips with your kids that are home to figuring out how you're going to bury your loved one. Always remember, we're here. We are here for you. And just take a little moment just for yourself. So thank you, panel. And now I'm going to turn it over to Assemblywoman Timberlake, so that she can close us out. And we look forward to seeing everyone next week at 7:30 with a whole new panel.
Thank you so much, ladies. It really is an honor to do this together with you for the community. And I hope that people are able to glean from what they need. You know, there was an interesting quote that I read today, and it said, you can have a glamorous 6-figure salary, advanced degrees, an executive title at a large corporation, and still be impacted by the negative net worth virus that is prevalent in Black communities. We know that there is a major wealth gap when it comes to Black and Brown peoples, and really the rest of the world. So we hope that you have been able to take something from this to help even close that, irregardless of how much you make. And you know, can use this. And we also hope that you were able to get some information about the life insurance, and thank you for that. It was so valuable. And regarding the funeral process, you know, this week, helping a friend who had her husband pass away, and the funeral director was so amazing. He even called me back in the morning and said, you know, you sounded so upset and disturbed. I said, yes, sir, I wasn't upset and disturbed at you. It was really just being upset and disturbed at this nasty, horrible virus that is ripping through our communities, taking our loved ones way too soon. And, you know, everyone is doing the best that they can, but no one has all of the answers. You are home now. Use this time to prepare. Use this time to do your will. Use this time to get life insurance. Use this time to do a noodle budget. Shout out Tiffany, the Budgetnista. Use this time to reach out and ask questions to certified financial planners like Teddy. You know, make sure that you are using this time to also prepare for you and for your household for the next disaster, or, you know, and we're currently in the pandemic that we're in. Use this time, see the silver lining. So thank you so much. And my prayers from my family to yours are for you to be safe and healthy.
Yes. Well, thank you everyone for joining us. We want to give a huge shout out to our chiefs of staffs who continuously help us plan these events. And we look forward to seeing everyone next week. And again, Ted, Tiffany, Ms. Ford, Assemblywoman Carter, thank you so much for coming on today. We look forward to seeing you soon. God bless everyone.
Glad to be here. Good evening.
Thanks, Ed.
Thank you very much.
Scotty.